Okay, now coming to indexation, guys. One of the key important things for your syllabus, which where there is an amendment. So please pay attention. I have just made one table for it. Summary showing the indexation benefit available to different types of long-term capital assets which are transferred before 23rd July. Long-term only before 23rd July we are discussing, because on or after 23rd July, madam has actually made it easy. So if the long-term capital asset which are transferred before 23rd July 2024, then if it is a bonds or debenture, no indexation. If it is a capital index bonds or sovereign gold bonds, indexation is available. We discussed about it already. Clear? Yes, sir. Next, if it is a depreciable assets, we always compute short-term gain or loss under section 50, where section 32 fails. Then if it is a unit of specified mutual fund or market linked debenture, for which we compute gain under section 50 AA, always short. Sir, one more item you have not given, because it came only on or after 23rd July. Okay, that is why I am not given it here. Then in case of EFT, guys, EFT, we will always compute long-term gain under section 112A. That is, it can be short-term also, but we are talking about indexation. Obviously, it is for long-term assets. That's why. And here, why did you mention here, sir? Because for this, we never check period of holding at all. We don't check period of holding at all, guys. Okay. So when we compute long-term capital gain under section 112A, no indexation. But please be careful. There is some pattern of calculating cost only if it is purchased before 1st February 2018. If EFT is purchased on or after 1st February 2018, then your actual cost is your cost of acquisition. Then for any other long-term capital asset, was indexation available? Yes, sir. Now the crucial point, guys, amended point. As per section 48, no indexation benefit is allowable on long-term capital gains arising on transfer of any capital assets taking place on or after 23rd July. Except, means for the following indexation is available? Yes. Except land and building transferred by resident individual or HUF, on which indexation is optional at the benefit of assessee. Catch point. One catch point is here. I kept on telling this. I will cover it. The point has come. An individual or HUF, while computing tax on long-term capital gain on transfer of land or building or both, has the option to take the benefit of indexation under section 112 in respect of long-term capital gains arising on transfer of land or building or both, which is acquired before 23rd July and transferred on or after 23rd July. Guys, for this provisions to apply, first of all, for any transfer of capital asset made on or after 23rd July, no indexation. Only in one case indexation is available. Which are those? Conditions are there. What is asset transferred? Land or building. Who has transferred it? Resident individual or HUF. When it was purchased? Before 23rd July. When it is transferred? On or after 23rd July. Yes, sir. Indexation is optional. But indexation is available only while computing capital gains. Look at the twist given by the madam here. She told indexation is available for you at optional only while computing tax liability. That means to compute capital gains income to be included under that capital gains while computing total income. Do we have indexation? No, we don't have indexation. We don't have indexation. Let me explain this with an example. Guys, listen here. Sir, assume my sale value. Okay, let me change. My sale value is 80 lakh. My sale value is 80 lakh. Actual cost of acquisition is only 30 lakh. Actual cost of acquisition is only 30 lakh. Now, this is a land or building transferred on or after 23rd July, guys. Land or building transferred by resident individual on or after 23rd July. First, we have to compute long-term asset. Assume long-term asset. First, we have to reduce only cost of acquisition. How much? 30 lakh. Assume no other cost, nothing is there. So, what is my gain? 50 lakh. Which gain? Long-term capital gain. Include this under the head capital gains to compute total income. Include entire 50 lakh. Sir, you told indexation. No indexation here. First include entire 50 lakh under the head capital gains. Is that clear? Yes. Finish total income calculation. Now come for tax liability calculation. There you have an option of indexation. There you have an option of indexation. So this is a long-term capital gain without indexation. Yes, sir. Then compute long-term capital gain with indexation also. Sale value is 80 lakh. So index cost of acquisition you claim. Assume it is coming to rough calculation I am taking. Assume it is coming to 60 lakh. 60 lakh double. Okay, sir. Now what is the long-term capital gain? With indexation. With indexation 20 lakh. Now you calculate the tax. Now you calculate the tax. With indexation, whatever you have got, on that, what is the tax? 20%. Or else, without indexation, whatever you have got, what is the tax rate on it? 12.5%. So, should I pay both? No, whichever is lower, go with it. Whichever is lower, go with it. Hope you guys are getting it. Clear? On 50 lakh, 12.5%, or on 20 lakh, 20%. Whichever is lower, you will go with it. Whichever is lower, you will go with it. And on the remaining incomes and all, calculation continues to be same. Calculation continues to be same. Look at the twist given by the madam. She told indexation is available, but not the way it is available. Why? Because, guys, when you include the entire 50 lakh gain under the head capital gains to compute your total income, it may have some consequences on you. It may have some negative impact on you. What is it, sir? Your total income will shoot up. You will be covered under surcharge and all. You might be covered under surcharge and all. Correct now, because when your total income crosses 50 lakh, 1 crore, 2 crore and all, you will be liable to pay surcharge. The trick played by our madam G. Hope you guys got the point, what I tried to convey. Yes, important guys. I know most of the students would have not understood this amendment in this way. They would have taught it, oh, long-term gain with indexation or without indexation, whichever is lower, take that in capital gains income calculation. No, 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 no. That is not what the government meant. Clear? So somewhere if they want to keep the question complicated in this attempt, this area will be targeted, guys. This area will be targeted. Yes. Later, I am also thinking to discuss the questions on it, but not in this video, in a separate video, guys. Let us do that later. But understand the provision now. I have anyway explained along with the example. Oh, important note. What is it? This is with respect to whatever I just now discussed. First, include the entire long-term capital gain without indexation on transfer of land or building or both in total income calculation. And while calculating the tax on long-term capital gain with and without indexation, and take whichever is lower.